Hi there, welcome to Kneppy Invest and welcome to January 13, 2025. The market closed 5 seconds ago. I just waited for the closing auction to be completed before I started recording this video because I just wanted to see if maybe we saw a bit of a rally in the market during that closing auction, but we really didn't. We'll get confirmation in a second, but a pretty negative day on the market today, which was to be expected. A really negative day on Wall Street on Friday because of better than expected labor market numbers. So the amount of jobs added was higher than expected and the unemployment rate actually dropped. The market doesn't want to see that. The market doesn't want to see a robust labor market because that's bad news for interest rates moving forward. It does not mean, or that means that interest rates won't drop by 1,000,000%, which is what the market wants right now for some reason. That also means there is potential that we might see a return to higher than wanted inflation. Particularly with Trump coming to power, his policies are tending to be more inflationary. There's no doubt about that. So if we see a more robust labor market, inflationary policies, maybe we get a return to inflation. And that is exactly what the bond market is thinking right now, with bond yields running wild. And that is why their market was down on Friday. That's why we're down today, is because of better than expected labor market numbers. It's crazy to say that, but the market over there, or the economy over in America, is a little bit more robust, a little bit better than expected. And it's crazy that the market sells off on that. But that's the world we're living in right now, because the market and people are used to really low interest rates. But that's not the way the world works usually. Okay, so the agenda for today's video. We'll go through the ASX today, look at the best and worst performing sectors, mining, best, worst, probably financials. I think actually energy would be the best today. Oil's been on a bit of a run. And then we'll have a look at the best and worst performing companies. I usually do a top 5 stocks of the day. I actually not doing that. What I'm going to do is just go through some of the interesting announcements. I'm not going to rank it. And the reason I'm doing that is because I couldn't decide today. Obviously, the stock of the day had to be Myer. I've already recorded that video. Premium Investments, which is linked to Myer, also released a trading update today. So by the way, Myer's released a trading update. Share price down about 22% last time I looked. Since we're now in the closing, or we just finished the closing auction, yeah, down 23%. The market got that one completely wrong. The chart of Myer actually looked pretty good before today. And quite a few other interesting announcements that I want to talk about. So what I'll do is I'll go through these other companies I'll do a brief summary of these other companies. I don't want to speak like 3 or 4 minutes, which I usually do. So no top 5 stocks of the day. And then I'll maybe have a look at some of your comments. There's about 10 companies I want to talk about. I might be able to talk about some of those companies when we look at the top gainers and top losers. Okay, so let's go back to the ASX today. A pretty bad day, as to be expected. I would expect energy to have had a pretty good day because of oil. So Karoon up pretty big, 3 or 4%. Santos probably up 3%. Woodside up 3%. So if you had all your money in energy, you're saying, what? I didn't see a bad day in the markets today. My portfolio is up 5%. Anyway, so unless you're highly concentrated in energy, you've had a pretty bad day. Utilities up 0.81%. And the worst performing sectors, IT down 3.3%, financials down 2.2%, discretionary down 2%, real estate down 1.51%, and healthcare down 1.59%. So a pretty bad day on the market unless you're heavily into energy. Gold's had a good day as well, up 0.76%. Not a surprise because it does look like gold might be breaking out. I haven't actually had a look at the updated gold chart. So let's do that right now. No, I don't have to do it. I can do that after I finish recording. And ASX 20 down 1.4%. So I'm just going to actually update this. I'm not sure if it does update. Yeah, there was a slight drop in the ASX. No, a slight rise in the XGO on the closing auction, but not all that much. So let's have a look at the ASX 20. Do you want to see? And that actually did rise rise. The percentage changed from 1.4% to 1.29%. So there's a bit of a rise in the market during the closing auction, but not by all that much. And you can actually see that. There's a little bit of a jump right at the end of the chart. That's a closing auction. Okay, so let's have a look. 4 companies up. So we're talking about energy and maybe a few utilities as well. So let's have a look at the best performing ASX 20 companies. Woodside, Transurban, probably utility, maybe. Telstra, Defensive, and Fortescue. And the worst performing companies, not a shock here. we have growth companies, Pro Medicus and WiseTech. The reasons that's not a shock is if we do see higher interest in the future, a return to inflation, those companies, particularly growth companies that are not profitable, who have their profit well into the future, you have to discount that profit at a greater rate. So though the value of that profit in the future is much lower today if we have high interest rates and high inflation in the future. That's why you do see a bit of a sell-off when interest rates start rising on high growth companies that are not profitable. I've talked about that in the past. So no surprise that Pro Medicus is down, WiseTech down, Wesfarmers, Westpac, Macquarie, QBE, CBA, NAB, CSL, all down by more than 2%. And quite a few other companies down between 1 and 2%. So again, not a good day on the market, even if you're heavily invested in the ASX 20. Nowhere to hide today, unless, again, you're heavily invested in energy. Okay, so let's have a look at the top gainers and top losers today. And I'll talk about any company that I want to talk about. I've listed about 10 here. So let's see if there's any companies here I do want to talk about. Some big turnover here from a company called Energy Transition Minerals. I can't be more creative with the name of your company. So I just want to see if this company did release anything today. They could have. I might have missed it. Julie Bishop and Partners appointed as strategic advisor. It was not market price sensitive. And share price is up. I'm not sure if that's a good thing or a bad thing. I'm non-committal when it comes to this company because I've never heard of it before. Energy Transition Minerals. And look at that chart. It's really taken off. Look at the volume coming in as well. I would not be trading this at this point in time. It's just gone too parabolic for my liking. The share price could drop from 8.5 cents all the way back down to 3 cents in not much time. It could take like 1 week. So I have no interest in these sort of companies. I'd say it's probably still a story stock, even though they're getting these strategic advisors. Who knows what sort of job they could do. Anyway, that's Energy Transition Minerals. I've never heard of that company before until today. Markup is 120 million. Jeez, really? Okay, what else do we have here? Nothing of note. Yeah, I don't remember any of these companies releasing anything of note. So let's have a look at top gainers by market cap. Kroon Energy, not a surprise. Nanosonics, that could be a bit of a surprise. Black Cat Syndicate, they're in production. I would say the chart for Black Cat Syndicate probably looks okay. I haven't actually looked at this chart for a while. Why? BC8. Yeah, look at that nice little rebound the last few days as gold has rallied. Black Cat has bounced significantly from about 58 cents up to 75 cents. Why are you doing this? Connect. Anyway, so a pretty good chart for Black Cat Syndicate, one of the best performers on the ASX today. Well, when you're talking about a lot of companies here, Duratec up a fair bit. Nice rebound for a Star Entertainment Group. That's just a bounce because the share price has dropped a lot. Syrah Resources. Let's talk about this one because this is one of the companies I do want to talk about. They are receiving a fair bit of money from the US government. Syrah rewarded $165 million US IRA tax credit. So that's interesting. This is also, I think, something to do with some sort of inflationary thing. US Inflation Reduction Act. So that's what IRA is. I'm not sure what Syrah has to do with inflation reduction. I think this is just a name so they can give money to a lot of these companies that are important, strategically important. And I'd say Syrah Resources is a strategically important company to USA. So they just call it Inflation Reduction Act for some reason. But a lot of money, $165 million US dollars. But let's have a look at the chart for Syrah Resources. Is this a reason to get excited? Is this the first thing? Is this like the catalyst to get excited? And I would say no. Just based off this chart, no, I'm not there just yet. We have seen plenty of times in the past where the market's got excited about Syrah Resources and the share price just then collapses. And I wouldn't be surprised if that happens today. Not a lot of volume either. And also the share price has sold off during today's session. So let's move on to the next one. Titomics had a good day, up 7.6%. 4D Medical, up 9%. This probably would have made it into my top 5 stocks of the day if I was still doing that. Share price up 7%. US Department of Defense, pretty sure that is Department of Defense, to conduct paid CT VQ pilot ahead of FDA submission. This is really interesting. They're developing a relationship with the Department of Defense. And if you do develop a really good relationship with any sort of government agencies, that could be quite sticky sort of relationship. So 4D Medical wins contract to supply CTVQ stands to United States Department of Defense ahead of FDA submission. New contract builds off the successful previous DoD sub-pilot of CTLVAS. So they're really harnessing this relationship. No mention of any financial numbers here for this, but it's all about relationship building for 4D Medical. Okay, let's have a look at the chart for this company. Is this a reason to get excited? Is this a catalyst for me to maybe take a position in this company? And unfortunately, the answer to that is no. I still don't like this chart, and this is really not sort of the breakout I might be looking for. So let's move on to the next one after 4D Medical. Anything else here? Finny, just a nice little rebound. Share price has been oversold, and that's about it. So no surprise if we didn't see many companies within this list that I do want to talk about. Really only Syrah, 4D Medical. So let's have a look at the top losers today. Okay, Pacific Edge is a top loser. Not a surprise. This definitely would have been in my top 5 stocks today. The only reason it wouldn't have been number 1 is because it's dog stock right now. Absolutely dog stock. Share price down 61%. I'm a little bit surprised the share price is down that much. So the reason why is because their products, I forget what it's called, won't have what do you call it? Coverage anymore. So Novartis finalizes non-coverage determination. Now they sort of hinted at this Pacific Edge quite a while ago. I still remember the initial announcement. In fact, if you have a look at the chart, and the chart looks ugly, if we go back, there was a first hints of this that they were going to cease coveraging in June 2023. Share price on that particular day dropped 73.7%. So that's why I'm a little bit shocked. This is not or should not be a surprise to anyone. Interesting commentary from the management, talking about how disappointed they are. For instance, where is it? Here, I actually say that, no, they don't say that. I'm trying to find what I read. Okay, they were disappointed. And they also mention here that Novartis, who made the decision, continues to misunderstand the current standard of care in evaluating hematuria patients, fails to consider new peer-reviewed evidence supporting the case or the use of CX bladder. They also go on and on. And then, this is where I thought I read they are disappointed up near the top. But the Pacific Edge chairman mentions, we are disappointed by Novartis' determination, which has been made despite strong representations from Pacific Edge, many key opinion leaders in urology, bladder cancer patient advocates, and the molecular diagnostics industry. They also talk about the possibility of maybe legal action, something like that, but I'm not sure they'll continue on that. They mentioned down here, the go-forward plans may include the following: pursuing a preliminary injunction and legal challenge, and then a few other things they could do as well. So a bit of surprise the share price is down by this much, but not a surprise it is down a fair bit. And if you have a look at the chart, no interest in this company, but share price down a fair bit on this ruling or this decision from Novartis, whatever you want to call it. Anyway, so that's the worst performing company today. Again, no shock. MyEco Holdings, which is a stock of the day, I've already recorded the video on that company. Share price down 22.3%. And it was just a negative trading update. You'll be able to read that negative trading update yourself if you want to, or just watch my video. What else do we have here? Tas Foods, Premium Investments. I suppose I could look at this one. No, I sort of did mention Premium Investments trading update in that MyEco Holdings video, but they are linked together. MyEco Holdings and Premium Investments are linked because of a deal they did a few months ago. Share price of Premium Investments down, what was it, 14%, 15%? So not a surprise, 15.6%. Not a surprise there. It was a negative trading update, particularly the apparel brands, which MyEco Holdings are acquiring. Not sure the time frame for that, but they are acquiring that. Those brands, which is like Just Jeans, etc. And nothing else here. Vista Group can be quite volatile, up and down, but I think Vista Group, if anything, share price has been an uptrend, if I remember correctly. Yeah, so a big red down day today. I'm not sure what has caused that. Did I miss something? Let's have a look at Vija or Vista Group. Vista Group? Nothing. Just a bit of noise. Okay, so let's have a look at top losers by market cap. Net wealth. I don't think they released anything today. Let me just look. It is down a fair bit, but it could be just a sell-off in the market. I think it is just a sell-off in the market, yeah. NWR Holdings. Okay, this is an interesting one. So NWR Holdings saw their CFO resign. So Chief Financial Officer resigned, not market price sensitive. I did see the share price down a fair bit. I went, what's going on here? They didn't release anything significant today, but it seems like the market did think the CFO resigning is significant. I would assume the market's overreacting here, and I wouldn't be surprised to see a bit of a bounce in NWR Holdings. So let's have a look at the chart. The share price actually, well, the chart not that bad, and I wouldn't be surprised to see a bit of a bounce over the next few days because this is a sort of announcement when the market can overreact a little bit. Now, I think the reason why the market has reacted the way it is because it's thinking the worst case scenario. Oh, the CFO is resigning because something bad's going to happen to NRW Holdings, and he's getting out before the ship sinks. And I think that's probably overreacting. Based on probability, more than likely that's not what's happening. He might have resigned or she might have resigned because they're just sick of it. Maybe they're just sick. Maybe they just want a different challenge. There's a lot of things that could be happening why they have resigned. And they just made that decision. So that's why I probably think the market's overreacting. I wouldn't be surprised to see a pretty good bounce tomorrow, particularly if we see the markets rally. Anyway, so that's NWR Holdings, Weebit Nano. So some of these just dropping because of what's happening in the market. Alkane Resources up 8.6%. Wasn't really going to discuss this one, but they did release their quarterly update. Share price down 8.6%. So obviously this disappointed the market. I didn't really go through this in depth because I didn't see anything obviously wrong. Again, I went through it fairly quickly. So let's just have a look at the chart for Alkane Resources. And the chart, I'm a big about this chart. Maybe today's price action and some good volume coming through, maybe this is a case for the share price of Alkane Resources to drop a little bit more. Now, the next one on this list, just below Alkane, is St. Barbara, down 11.6%. I did have a look at this one, and I will admit this one was negative. St. Barbara down 10.7%. Quarter two preliminary update, and it was negative. It was negative. See if I can find it here. Talking about gold production. Here it is in the 1, 2, 3, 4, fifth paragraph down. Talking about production guidance is not changed. However, and whenever you see that word however after not a negative thing, you know something bad is going to follow it. However, after the lower than expected production in quarter two, the outlook is now at the lower end of the range compared to mid-range expectations at the outset of the December quarter. So in a way, this was a downgrade, a bit of a downgrade for St. Barbara. And this happens to this company, seems a lot. Maybe not downgrades, but just negative news. So let's have a look at the chart for St. Barbara. Share price had rallied after another negative announcement not long ago, but that was because of Papua New Guinea wanting some tax from St. Barbara or something. So share price had rallied from that bad news, and share price was actually up a fair bit on Friday. 12% on Friday, and looks like some participants in the market got that one wrong. Share price down 11.8% today. What else do we have here? Solvar. This is one I've been trading, and this was an interesting one because, what was it, SLV? What was it, SVR? SVR. The chart was looking really good, and all of a sudden the share price has just dropped like a rock. I'd say this is oversold. This could be a sell signal. The share price right now is at a support level, but I would say this is significantly oversold because the share price has dropped a fair bit. The way I would look at that is if I just put RSI in, RSI, Relative Strength Index, yeah, it's just hit oversold. I would not be selling this as a trade, even though the chart looks pretty negative, because I wouldn't be surprised to see the share price bounce from here, particularly if we have a good day tomorrow. So that's Solvar. Not sure what's happening there, but the share price or the market is selling off on that company. Michael Hill International. This is an interesting one as well, because I did put this onto my watch list because there was a potential break happening, just a potential break. I wanted to see the share price get above 61 cents. You can see it trying to get above 61 cents. but I didn't. So I just put this onto my watch list, and I'm probably going to take this off my watch list right now because share price is struggling at this point in time. And that's it. Oh, Astral Resources also released a quarterly report. Share price down 6.9%. I don't think that company is in production, so I skipped by that company. Let's just have a look at the quick chart for Astral. In fact, the chart looks pretty good for Astral Resources. I don't mind this chart at all. Probably would like a little bit bigger volume coming through since that peak in volume we saw in October, but it's not a bad looking chart for Astral Resources. I don't think I have this in my watch list. Oh, I have in my gold watch list. There you go. I was wrong. Okay. So that's all the companies in the top gainers and top losers. So I'm going to go through some of the other companies that I have not mentioned that I wanted to mention. So I've already mentioned quite a few of them, to be honest. Yes, I actually have mentioned quite a few. In fact, I've mentioned about 7. So I've got 4 to go. So there was 11 companies I want to talk about. The first one, no, actually, I don't really, should I talk about this one? A company called MyEco. Now, I did have a look at this company's sales update. Not trading update, but sales update. So when I see the word update, I'm going to have a look. Unless it's sort of an update like a production, maybe not production, maybe it's like they're building something and that's an update. I won't have a look at that. But I did have a look at this. I didn't know how to pronounce this. I was like, MyEco, what do you do this? So then I have a look at the sales update and then it became clear. MyEco. So it's an eco company. In fact, if you have a look at their name, it's my, and then eco is, or the E in eco is capitalized. So yeah, MyEco. They talk about sustainability, that sort of thing. So wastes, resin, film, that sort of thing. They're talking about revenue growth, really low revenue to begin with, but revenue is growing. Not talking about profit or anything like that, because I'd say this company is well away from being profitable, but looks like things are moving in the right direction for this company. MyEco. Haven't really had a look at this company before. Sales outlook as well. The company is expected to grow overall group sales in the second half of financial year 25. Well, I suppose that's good. The record quarter of global MyEco branded sales to major retailers and independent distributors highlights a category's significance in driving organic growth. I don't know anything else about this company. Here we go. About leading developer and manufacturer of sustainable packaging materials. There you go. Packaging materials. Anyway, so I just wanted to see what this was about. The main thing I look for is revenue growth, but then I want to see any sort of profit, any mention of profit or cash flow, and there was nothing like that in this particular announcement. So let's have a look at a chart for MyEco, ticker code MCO. And the chart looks promising not that long ago, and then the share price has just collapsed. So no real interest. Notice the volume, though. Between August and about November, the volume has dried up, but no interest in MyEco. What's some of the companies I do want to talk about here? So MyEco. Oh, Genusplus. I forgot to mention Genusplus in last Friday's video. I said I was going to mention it because the share price was up a fair bit, 6.4%. They released the announcement fairly late at 2:52 p.m. That was around the time, or just before the time I was starting the recording. So I actually did miss this announcement until I was recording, if I remember correctly. Genus awarded contract for Western Power Clean Energy Link. So the company keeps releasing these sort of contract wins. So quite a few over the past few months. In fact, 3 in the last month. This is a nice looking chart. This is a company I'm trading, by the way. And let's have a look at the chart. One of these announcements or the contract wins in itself is nothing to get too excited about, in my opinion. But because the company is keeping on releasing these sort of contract wins, overall is quite good for the company. So they are winning quite a few contracts. So let's have a look at the chart for Genusplus. It looks pretty good. Now, you could say the share price has been going sideways and struggling to get above $2.70. So what I might do here is just put a line at $2.70. There we go. If I see the share price of Genusplus gets above 270, that would be a good move. You can see it's struggling to get above 270 back in October, then again in November. And even on Friday, the share price actually did get above, geez, Share price did get above 270 for a brief period. So obviously, or hopefully, it should be obvious why 270 is an important level for Genusplus. So if I do see it break above that, maybe I'll add to my position in this company. So that's Genusplus. I forgot to talk about that company in Friday. And what about Vulcan? By the way, I should mention I have taken a trading position in Vulcan. I'll talk about why in a second. Vulcan Energy, production of battery quality lithium hydroxide monohydrate. This actually did look good. I did have a quick read of this one. It does sound positive. First, fully integrated production in Europe of battery quality lithium chemicals from resource to final product. If I really see lithium starting to move direction, starting to go up, this definitely would be a pretty good play. Now, in saying that, even though lithium is not doing anything as a commodity, the chart for Vulcan is really interesting, really good. And that means there's some strength to this company. Now, the reason I took a trading position in Vulcan is because we saw the share price pull back a fair bit from the last peak on 26th of November. But I did see a little bit of support at around about $5.20, $5.30. And when I saw the share price rally on the 8th of January, I just said to myself, that's a good sign that bottom has been reached. And then I took a position the next morning at, I can tell you exactly what price I bought because I bought on open at $5.45, which was the low of the day. And the share price kept on rallying. So this has been a successful trade for me so far. I was a little bit nervous. I was wondering why on that morning that they were selling on open. So if you have a look at the 5-minute chart, you'll be able to see which day did I buy. It was on the go back to the daily chart. Which day was it? Was it Thursday? Yeah, Thursday, 9th of January. Sometimes I will buy an open. And when I saw the share price or the indicative price down about 2% or 3%, I went, I'm going to buy on open here because I think the market is wrong here. And where was it? In fact, you can barely see it here. You can barely see it here. It's right in there. If you look at the 5-minute chart, it's right. There's a little bit of a dip here. So I just saw a bit of an opportunity because the market was, I'm not sure why, because on Wednesday session, the last about 20 minutes, there was a lot of buying coming in. And we have seen a fair bit of buying coming in since then. So a nice looking chart for Vulcan Energy. And that particular Wednesday session was sort of the trigger for me for taking a trading position in Vulcan Energy. Second time I've done that. Funny enough, the first time I did it, I sold probably at about 540 and I bought back in at 540, 8 months later. So I bought at almost the same price I sold. So you could say, why did I sell? Well, during that 8-month period, my capital was probably being put to better use than just having a position in Vulcan Energy. So again, I'm not hesitant about buying a position I've already sold out in the past. Anyway, so that's Vulcan Energy. Pretty good day. Actually, a really good day. When the share price is up 3.7%, when the overall market is down a lot, that's a pretty good day. And finally, Love Group. Now, I have no interest in this company at all. Zero interest in this company. So you should be able to know what this company does just by the name. They're an online matchmaking company focused in Singapore, Malaysia, somewhere like that. This company's been around for a while. Zero growth. And when I say zero growth, they had the same amount of receipts in 2017 as they have in 2023. If you do have a look, and by the way, the whole reason I'm talking about this company is the first company on the ASX to release their Appendix 4C for the December quarter. So congratulations, Love Group. You are the winner. And I usually do feature the first company to release Appendix 4C. And that's the only reason I'm talking about Love Group. Or to be honest, if they released it like third or fourth, I'd probably still be talking about the company. Now, they did provide quarterly receipts history here going back to 2022. But if you go back further, has been no growth in receipts over the past 7-8 years. Yes, this company has been on the ASX for a while. Hong Kong, Singapore. I knew it was like Singapore and somewhere else. Yeah. So matchmaking, online something. Now, in saying all that, not much growth in receipts. This company is operating a free cash flow positive. Not by a lot, but they are positive. And this is what they're focusing on. In fact, they actually mentioned here, the CEO mentions it. They also gave a bit of a capital return. Going forward, we will continue to operate our business to maximize free cash flow for shareholders. I'd like them to maximize growth and free cash flow. By this point in time, it's just free cash flow. And let's have a look at the chart for the Love Group. I suppose, why not? And not much trading happening with this one. This is the daily chart, and I can see 7 years of history just on the daily chart, which tells me it's illiquidly traded. In fact, was there any trade today? No trade today. If you have a look at the buyers and sellers, there's one buyer at 7 cents, and there's quite a few sellers below 14 cents. So the next time this trades, it's going to go down. So there's a massive difference between the first buyer and first seller. That's another reason to be a little bit wary about Love Group. The last time shares were traded in this company was the 3rd of January. So it doesn't trade all that often. Okay, so that's all I've got for the stocks of the day. I think I've gone through all of them. Yes, I have. And don't forget, the stock of the day is MyEco Group. I'll release MyEco Holdings, and I'll release that video a few hours after I release this one. Anyway, a few of the comments. Let's have a look. And I do think, based off, if I go to content, and I can decrease the size of the font here. So if I go through, I'm getting a lot of comments. So I'm going to have to eventually say I can't go through all your comments. It's an impossibility because I am getting quite a few comments, and I've seen that even in the last 24 hours. If I just go to community, by the way, one person has disliked your stock picks for 2025. One person has disliked that. How dare they? Anyway, if I go through all your comments, there's a lot here in the past 24 hours. Probably I'd say 30. So there's no way I'll be able to go through all these comments. So I need a way that I can filter. Maybe I can just do, I have no idea how I'm going to do this. So it's pretty unfair that I'll just feature a few of the comments. I don't know. So I'm not sure how to do this. I'm going to have to think about this. TraderHooper. I'm going to look at this one. TraderHooper. This is an interesting one. I did actually read this earlier. Because this is in regards to your stock picks for 2025. And I'm going to be honest with you. I 100% agree with TraderHooper. 100% agree with TraderHooper. Some of these stocks are hot now, but will be a yawn in December. Absolutely agree with that. And that is a problem we have for a 1 year period. You will see the route I have gone down, the road I've gone down, picking my 20 companies. It's a little bit different from you. However, I do have I've put some limitations on what companies I can choose. But you'll see I have used a bit of a different strategy. I haven't gone for any hot stocks. I've gone for companies that, well, I actually won't talk about now. I'll talk about when I release my 2025 companies. Anyway, some of these stocks are hot now, but will be a yawn in December. And that's why I'm trading a lot of these companies, because I think eventually I'm going to take profits. It could be next month. It could be 6 months from now. It could be 9 months from now. It could be a year from now. It could be 2 years from now. He also mentions here, that's what makes stock picking difficult when you are considering a stock for 1 year. Some of the best performing companies right now for most of last year doing nothing. Appen, doing absolutely nothing for most of last year. And then from August, it just took off. So that's why I think just picking for a 1 year period is a fool's errand. So here is Appen 1 year chart, not 1 year chart, daily chart. So if you pick this one at the end of 2023, it did nothing for 8 months, and then it just took off in August. So we just don't know which companies will be hot stocks at the end of this year, and that's when you might see some really good gains. We will miss out on stocks which are not moving now. Exactly what I talked about with Appen, but will be great by the end of 2025. Exactly what I was talking about. So thank you, TraderHooper. And we'll pick a lot that are good for the next few months before faltering. Absolutely right. That's why I am trading some of these companies, because when they start to falter, get out, take profits. At least that's been my experience with stock competitions in the past. Yes, in the past. Yes, absolutely right. I also think there will be a 10-bagger somewhere in those stocks. I think that's, well, maybe not a 10-bagger in 1 year. I think that's a little bit more difficult. I wouldn't rule it out, but I'd say maybe a 5-bagger. I think that's more likely, but 10-bagger, yeah. No idea which stock, obviously, also likely to have a stock that goes into administration. Which one's more likely, a 10-bagger or a company goes into administration? It all depends on what we see in the economy, I think. If we see companies having way more difficulty raising capital, I definitely can see that. But because there is a little bit of heat in some of these companies, I think the chance of administration is a little bit lower because there's a little bit of, I wouldn't say FOMO, but there's a little bit of interest in these companies. And I think that interest will last a little bit longer after the hype has gone out. Anyway, some of the riskier stocks are like that. They'll either fly or die. Yeah, absolutely right. And that's the essence of these sort of companies. If you're willing to hold a high risk company, you have to know that there is a high risk. But the only reason to own a high risk company is because of the potential returns you might get. If a high risk company had very little likelihood of high returns, then why would you take on that risk? And same thing with low risk companies. If a low risk company had a really good potential of high returns, then why would you not be holding that company? So low risk, high returns. That is why I am really interested in some of the tech companies right now, particularly Alphabet. The valuation of Alphabet right now is quite low compared to the returns you might get over the next 5 to 10 years. I think, in fact, Alphabet is really cheap, particularly when you look at the PE ratio, is lower than CBA, which has zero growth potential over the next 5 to 10 years. Zero. Alphabet could be a significantly bigger company. So it's very important to know the risk of a company and the potential return. So CBA, sure, it's low risk. It's not going to go into administration. It's not going to grow much. But the potential returns moving forward for CBA over the next 5 to 10 years are fairly low, really low. In fact, I'd say negative. Anyway, so an amazing comment from TraderHooper, who probably deserves more love. Although Dicey says, what a pointless comment. There you go. So we all have different opinions. But I actually do agree with TraderHooper that everything in that is absolutely right. Although Dicey says, yeah, it's wrong. Okay, so I'm not going to go any further because what I could do is maybe have a look at some companies, maybe charts, but maybe that's what I could do. You give me some charts you want me to look at, and maybe I could finish these ASX Daily Rundown videos just by looking at some charts. So let's do that with Dicey, since I sort of badmouthed Dicey. Inghams, looking not bad in my opinion. What do you think? And I'll be honest with you, Inghams popped up not that long ago. And I had a look at the chart and I went, I don't think I'd take a position just yet, but it was starting to look a little bit interesting. Now, the reason why is we can see a possible crossover in the moving averages. Unfortunately, today has put a bit of a dent in that. So we want to see the share price get a little bit higher. So we do see that crossover. So definitely Inghams is starting to look a little bit better, but I'm not quite there taking a trade in Inghams. Okay, so there you go. That's all I got for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.